General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's knock the workout. Today's Thursday, the 23rd. The framework was expansion, daily stances gauge, confidence level medium, the reason being, price delivery signature was seen. Anchor point has been confirmed. It's now Tuesday. Is expansion playing out? Yes. Turn this into day? No. Take a look at NASDAQ. Monday, Tuesday, created that range, respected this OB. You know, there's an S&T here, so that's starting to be turning point of the week. Sold off in Asia, London, then New York came, gave us a sell as well, take out Monday liquidity, and then PM session popped back up. ONS fell hard, New York continued, only to bounce back in the PM session. True. NASDAQ on the H1. See how we respected this daily order block or daily fair value gap. Even that new day opening gap. Nice respect to the daily fair value gap. Only thing we didn't get was previous week's low or previous month's low. Which we might get tomorrow. On the daily, kind of tacky, but I will be watching this now. We closed past it. We didn't take the high, but since it's the last up candle, we could get a rejection. Now I'm watching 50% of Tuesday for the inverse effect. It's a nice untapped volume imbalance below June low. This one down here. And it kind of cleans up this week's on SPX. Monday, Tuesday range, Wednesday sweep. Cleared out the liquidity. Tuesday range was created. Wednesday did the purge. To sell off in Asia is rare, but we getting used to the Trump era times. Trump, you gotta trade Asia. Just got to. H1 perspective, kind of like a 3 drives pattern. We didn't make it up here or to the breaker block. On the news too. We finally took out the internal range liquidity. Maybe we pushed to the propulsion block down here. The daily, nice respect here, but I still want to see how we turn out tomorrow because I know they're probably selling off Tesla, but Google should find some type of support. I don't have big expectations for Friday. I think the weekly range was capped today. Previous day low seems interesting for a target since I don't think people want to hold risk now that Iran is heating up. They talking about reblockading the strait, I believe. And it's the stock chart perspective. I like how we respected this order block. I want to see if we get any lower. I also know we're just at 50% of the IPTA. Strong gap down, which respected the daily OB. Qs. We cleared this new day opening gap from a week ago. But now we got all these lows here. 20-day low, pretty close to the 40-day low. And Nvidia, which is the staple, it was a down day, inside day, but we're not losing value over here. That show you is really just profit taking other sides of the market. Engagement, it's a London execution. That was a solid. This one's a late one because I was supposed to get in here. So I do look for the sell in London, one quality setup, and one rush. So I found a plan. No, the second entry was rushed because I missed the first failed expansion. Like that was an obvious one. If not, what caused it? That was FOMO. What did I do well was execute. What will I do differently next time? Be aware. You need to watch every candle in scout mode. Kind of got lackadaisical here. Did the framework play out? No, I was expecting price to go up. What did I learn about pattern? I told myself I'm getting used to only trading when the ADR is in play. Definitely get full, it just get choppy. What I watch for tomorrow? There's nothing really to watch. There's no news, no big earnings. They will report on Friday. Alright, so that was the chart work. Y'all have a good day. Peace.